By most traditional metrics, the pace of our current recovery has exceeded even the most optimistic expectations. That's due in large part to rapid vaccine deployment and the robust support to families, businesses, and state and local governments provided by the American Rescue Plan. This is the kind of recovery that President Biden set out to deliver when he took office last year. Aggregate growth has been rapid and continued, with our real GDP expected to grow at 5.3% in 2021. The most recent blue chip forecast put 2022 growth at 3.3%, noting that COVID and supply chain disruptions to the economy are not really expected to disrupt economic growth. In itself, this represents a stunning economic and policy achievement. The U.S. labor market is exceptionally strong. Over 6 million jobs were added last year, and the unemployment rate is again below 4%. Other metrics, such as the fraction of workers who quit their jobs, suggest that the labor market is very tight. Historically, when quits have been high, workers have been moving to jobs they prefer for higher wages and better working conditions. Indeed, we now see upgrading of job quality and increases in nominal wages, especially at the lower end of the spectrum. Household and firm balance sheets are even healthier than before the pandemic. To date, we have not seen large or persistent increases in long-term unemployment, indebtedness, evictions, or bankruptcies. And this contrasts with the aftermath of the global financial crisis. Of course, given the scale, novelty, and uncertain path of the pandemic, the recovery also comes with challenges. Labor supply has yet to recover to pre-pandemic levels, as health, childcare, and other related challenges remain. Inflation is a valid policy concern, and it's risen to levels not seen since the 1980s. It far exceeds any increase that would normally result from a labor market with 3.9% unemployment. I believe that the pronounced shift in spending away from services and toward goods contributed to outsized price increases. Additionally, the associated supply chain bottlenecks are boosting costs and holding back production of automobiles and other key products. Despite these challenges, it's important to note that professional forecasters think that inflation will substantially abate next year. Part of this view is likely driven by the expectation that the Federal Reserve will continue to account for these pressures as it fulfills its dual mandate. And as the president has remarked many times, the administration continues to tirelessly seek strategies to alleviate these pressures through actions such as easing congestion in our ports and expanding the labor supply. Yet, even as policymakers continue to address rising prices, our economic recovery will face significant risks until we have moved more decisively past the pandemic.